All right, so it's everything now is clear. There's a 1 2, there's a 3, there's going to be a 4A and a 4B. You're seeing this kind of left shoulder to the right. Probably best entries are going to be the same bottom of that left shoulder, maybe a bit higher. So you are looking at 152.5. you want always to be above level 1. This is going to continue higher into a wave 5. This is of course a wave 4. So your best entry, everything now gets really fixed. Best entry is 153, 152.9, 152.85, above 50%. You see that it is currently above 50% and remains so as you move higher. The stop is very close. You stop just above, just below the neckline, 151. So 150 points away. This is very good for sterling yen. It will get us under that 3% prerequisite for good money management that we usually do, that we do not risk more than 3%. So it's 150 points, should buy 2 minutes. Again, the entry is 152.8, for instance. The stop is just going to be 151, even 151.2. So there's just something like 160 points or 150 points is $320 or 3.2%. And of course, the target is 158. This 500 or at least 400 points away. Between 153 and 158 is actually 500 points away. We're looking first at 157 here, but in reality we can get even 158. We're looking at 158.43, 161.8. So this would be a more lucrative trade, I think, to take than that of the sterling yen, than that of the sterling dollar, sorry. All right, so let's take a look at the daily to check momentum on the daily chart. It's very important that it begins to show positivity, or that it's going to at least bounce above an internal level 1. Okay, so this is the 4-hour chart. We're having, of course, a flat positive momentum. Flat, again, we know is an ABC. So that 1, 4, and 5, this is an A and a B and a C, which would mean that maybe we're gonna break below level 1. Let's take a look at the daily. This is the important item here to see, is really the daily. And we need to always have good, strong, positive momentum on the 4 hours and on the 1 hour, if this is not going to reject at overbought. This is the only constraint on this trade. So of course this is the daily chart. You're looking at the last time we were at overbought levels, there was a rejection. All right, this time around we're better off because we have broken above the old top, but if we get negative momentum, we're back to where we have started, right? And it doesn't really have to, the move could be short-lived. You're comparing, of course, these two green vertical lines together. We're here today, and last time we were there, we rejected at overbought. Let's check the momentum at that point on the 4-hour chart. How strong was it? So, of course, at that point, we were actually having a zero-line rejection. The market was down. This is the same level at which we are today. We have very strong positive momentum at that level. At that point, we're having a zero-line rejection. So the reversal is confirmed. The reversal is really confirmed, and we could even want to buy something upfront. We may not get to see these levels of 152.5 and 153. These where we would want to engage. So let's check the very smaller time frames, 15 and faster. The next time we get to see any negative momentum on the 15 minutes or the 5, we would just buy. Negative momentum, of course, cycle extreme would be perfect, but we just check the 1 hour, we check the 15 minutes, and so we check the 1 hour, we check the 4 hours, they're all positive. So any negativity you get on the 5 and the 15s, if it does a cycle extreme, we project Elliott retractions and at least buy half size at these levels.